This is a video chart presentation of Biodel Inc. Biodel trades on the NASDAQ exchange under ticker BIOD. We're looking at this stock primarily because it's making a double bottom. Bounced right off this $2 mark in December. Had a real nice move up to $3.71 highs in March. Fallen off ever since then, right back down to that $2 mark. But a green close on Wednesday and Thursday, coming off that support level to close Thursday at 216 is enough for us to pay attention to this chart going forward. Keeping in mind $2 for the support, and is a nice place for a stop loss should the stock continue to take on some downward pressure. Now we've got the MACD slowly edging back towards zero. Actually dropped a bullish cross here at the beginning part of the month, giving us a sign of short-term bullishness in the trend, but ultimately we want to see it back above zero to give a much stronger sign of bullishness for the trend. Similar to back through here. See it edging back upward. Stock started taking on some upward pressure, but upon this break of zero, that's when we started seeing the sharper price movement. And as we always look for on any pullback, MACD held above zero, continued the upward climb, but just as a general lesson, when that MACD didn't make a new higher high, it made a lower high as the price per share made a higher high. That's a negative divergence and a sign that trend was losing strength. And of course, when it broke back down through zero, that's when the decline really started to accelerate. Just something to pay attention to going forward. And that's why we always look for that MACD to hold in positive territory, because when it didn't rotate through here and try and bounce off that zero mark and continue to hold a bullish position, it was a signal this chart could be in trouble. But right now, with the double bottom support and the MACD trending back towards zero, it's worth watching for a stronger shift to bullish mode. Not getting much from the slow stow. Just by definition, it moves very slowly. A little bit of a rotation off this bottom. Some early on signs of momentum building, but still not getting much. We want to see it over top of 50 to show a much stronger momentum. The money flow index, now that's given a little bit of a stronger sign. Uptrending, now breaking through 50. Telling me that the current price is slightly above 14-day averages. That, of course, is a bullish sign. Relative strength index, registering a 44.3, getting pretty close to that area of breaking above 50 that we want to see to show the bulls are taking control of momentum. Someplace the RSI hasn't been for several months. Back here in March, when it broke back down through 50, it was an overall sign of some momentum weakening in the play. So right now we're looking for the reverse. Want to see it back over top of 50, show a much stronger momentum in the chart. But of course, the biggest thing for us is this bottom support. I'm going to go ahead and mark it right at $2, but it does run just a hair lower down to $1.97. But if it closes below that $2 mark, I'd certainly start to be concerned because there's not any other support in sight. Now the first source of dynamic resistance I'm going to look at is this 20-day moving average. This purple line represents the middle of the Bollinger Bands. Bullish charts are trading on the upper half of the bollies, and you can see price per share has had a difficult time on this slide moving through the middle of the Bollingers. So that's going to be the first place that I'm going to look for some dynamic resistance. From a static standpoint, I think it's going to see some right here around 225. You can see historically that was a little bit of an area of support and resistance, but I really look for it to get stronger up at $2.50. That's pretty close to the 50-day moving average. Of course, it's dynamic, it's moving down, it's going to continue to move a little bit lower. But right now it's at 248. Again, historically speaking, an area of support and resistance. Classic TA says once that support was broken, it's going to serve as resistance again. So I'd expect that to be the first real source of some resistance. Above that, I wouldn't look again until up near the $3 mark, which I'm not even going to bother drawing on here. That's a pretty substantial move from the 216 closing price on Thursday. I always prefer to stay short-term focused. See how this stock acts, if it can move through the 20-day moving average, and if it can come up and challenge the 50-day in this source of static resistance. Volume has stayed pretty consistent. 278,000 shares traded on Thursday. A little bit of an uptick over the previous day, but nothing to write home about. I'd like to see a larger volume day heading into this weekend and to start next week to show that there's some real buying pressure building off of this support level to help the momentum and trend indicators get ahead of steam to move into bullish positions as the stock tries to challenge a resistance point. But for right now, as long as this $2 support can stay intact, We're going to keep an eye on Biodel and see how it performs. But as always, it's merely my interpretation of the chart. I'm not a financial consultant. Strongly encourage you to do your own proper due diligence. Consult with a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Please visit the allpennystocks.com website to view the full disclaimer disclosure, and do not base any investment decisions upon any material found on the website and/or this video chart. No person employed by All Penny Stocks is a registered investment advisor or licensed broker-dealer. Thank you for watching. Trade smart.